Hello, Olymp traders. Welcome, my friends, to today's webinar where we continue to dissect the best and shortest way to quick profits with a small account. Now, I say that word quick, but it kind of makes me cringe. There really should not be anything quick about it because as we came to the conclusion yesterday, slow and steady is the way to go. So before I get too far ahead of myself, let's check our sound and image quality. Can you guys hear and see me? If you could write some pluses in chat, that way I know that we can continue with the webinar. Now I'll have a little bit of an academic part where I'll give you some more tips and tricks and hints on trading with a small account, and then we will go on to look for more additional trades that we can put on together. Now, if we have a look at the history of what we have done so far, the Canadian dollar, as you guys saw, was a good entry point, right? Now we broke down below this level here. Unfortunately, I'm too late to the party to add more. If I say would have caught on a few hours ago this morning, I would have definitely added more to this position. Have a look at the Australian dollar, US dollar. Again, it worries me that we got up to this line again because we have double risk, right? We have 2x R on this trade. But again, from this level here, with kind of the short-term positioning of the CCI indicator, also the lackluster, as you guys can see from the moving averages, we do have the tilt going down. So and we haven't broken above this line. We're still respecting the bearish trend. So remember our entry criteria. Again, this is a trade similar to what we would take. We need a large candle down that signifies that the move down has started, and we take the trade. Another sneaky way when you're a really busy guy, another sneaky way you can open a trade is, you see this level, 0.7758. Right here at the right side of the screen, you can see my levels. We can open a pending order. We can open a position, or we can tell the platform to open a position on our account when price dips below that level. That is what we want to see, but what we lose by having the computer do it for us is witnessing that there is a big candle. Say that there is a spike up higher, then a random spike lower, and then we continue up higher. That spike up higher we did not see. So you lose a little bit of information, a little bit of intel when conducting this kind of trade. Again, I am bearish for the US dollar, bearish for the Aussie dollar, and there has been no sign that we have changed direction and we're going right back up. So as of right now, this is the full-blown correction that we have on an asset that is way overbought. So you guys have a look. This asset has been growing indefinitely. And look how long the corrections can be. This is very important that you guys start to understand how to analyze market structure. See, this same market pattern that we're in right now, the start of it has been here before, and it was just a little while ago, a quarter ago, in September, the correction started. So right now we're sitting it out. We're in a good position. No sign of going higher. So when we do get a confirmation in chat, let me give you guys this assignment because I'm going to continue on with the lesson. In chat, you guys notice that on the 10-minute graph, 15-minute graph, we have a large red candle, something like this, that breaks this previous level. I want this level to be broken. So do you guys start to understand how I use levels as an indication of when I should pay attention? So let me draw out the level for you. Like, actually, let's do a horizontal line. So right here, this big green candle, if we break it, you can go even as short as this candle. That's really short term. I mean, when we break this candle, that's a big sign. You know, there's a lot of traders that trade 10-minute candles. There's a lot of traders that trade 1-minute candles, 5-minute candles. That's why we have them on the platform. This is what a lot of traders use, institutional players, big money managers. That's why these time frames are available for you. I remember somebody in chat asked if we'll have a 2-minute time frame. Unfortunately, it's going to be so skewed, it's going to be so weird, the information that you get, that the signals you'll use either are going to be too quick or too slow. Do you understand? It kind of doesn't fit in the way that the market structures itself on the 1 minute time frame and 5 minute time frame. I'm not saying it's not possible. Of course, there are traders that trade weird time frames, but again, then there's traders that trade off of what way the moon or how what side of the moon is facing towards us. Obviously, there's only one side, but how much sun is reflecting off of it, or elephant migrations in Africa. I've heard the strangest things about how traders forecast market movements. Again, I try to get across to you what works, what has been tested, and so we're looking to break this level. I'm going to color the line a little bit differently. I'm going to color it, say, yellow. When we pass the yellow line, we want to drop down. All right, so quickly, talking to you guys in chat. Great, you guys can hear me. Buenos dias, muchachos. Indonesia, welcome. Georgia, hey, good stuff. Why don't you try fixed time trades? I have the answer for you where you should use fixed time trades. We'll get to that at the end of in the middle of the webinar. Okay, so growing a small account. Yesterday I left you off with a few good trades. Let's continue. The biggest issue that you guys will face over the course of using a small trading account is the more risk you take, the harder it is to recover from a loss. And I have a mathematical table for you. So the gains that you need to make in order to make back, to break even, to get your account back to that, say, $1,000, when you lose 5%, all you need to do is make back 5%. But then it starts to get skewed. The more you lose, the more you have to make back. See, when you lose 25% of your account, $250 in my case, then I need to make back 33% gains in order just to get to break even. And this formula works in the opposite direction as well. If the more money you have on your account, and then using same standard lot size, so standard positioning of 1% to 5%, and we'll talk about percentages today as well, you need to you'll make more. You'll be making more each time because that 5% will obviously grow the bigger your account is. So having said that, let's get back to trying to find an entry point today. All of you guys have some experience in the markets, and you have probably the platform in front of you or on your cell phone. If it's comfortable for you, have a look at the market. See if you can find a position to open and send it in chat. I'd love to hear your guys' opinions, and we can dissect some of that as I continue the webinar. So one other tip, if for those of you that just want the academic part, get out your pens and papers. Let's talk about leverage. One of the tools that we have that allows us to make a lot of money with a small account is leverage. So what do I mean by that? Well, your loss or your risk in a Olymp trade is how do you say it? Limited. Like the trade that you open, the $67, is the maximum I can lose. So actually, this is a very, very helpful tool that doesn't allow to make stupid mistakes, right? If you lose the 67, that's it, you lose. You can't increase the leverage on one position because people fall in love with positions. They get scared. They're saying, oh, it'll be good. So on MetaTrader, you can move that stop loss and it'll allow you within the parameters of the amount of money on your account. Here, your one entry, the one that the button that you press in order to make the risk on the trade is limited. So this is good. And you have the opportunity to use leverage. So when we look at Bitcoin, we only have a 10% leverage. If we look at some stocks that we have, the leverage is even smaller. It's 5 to 10. So again, 5 times leverage doesn't give you that kind of whopping result for a small account. But you know what does? For all of you fixed time trade lovers, you have stocks that are tradable on FTT. And the rates of return for the stocks can be huge, up to 90% if you have the highest status, 92%. So using fixed time trades, you can get outsized gains if you begin to read the stock market. Look how respectful it is of previous levels. The US stock market is a very technically based market. The traders that trade and the algorithms, the robots, they have precise levels they want to trade from. So the example that I can kind of give you within another market of a very cyclical, very structured market is the British pound US dollar currency pair. This is another financial asset that moves in very structured patterns. Again, if I draw out the very basic trend analysis, it'll show us that this asset goes from level to level. Again, you can use support and resistance levels to draw it out, and you'll see that it's very square. The movement of the pound dollar is very square compared to some of the other currencies, where some of the other ones are very, they have a slight tilt to them, like we saw with Apple, right? It's got a very distinct tilt that it respects and represents. So use leverage, use FTT to your advantage. These are tools where you can pump out more results by giving less, from giving less, okay? Trying to maximize the tools that you have. Number two, we want to trade conservatively. So what I mean by that, there's a luxury that traders with a huge account have that some of us don't have. They can open up huge position sizes for $6,000-$7,000 and can put stop losses multiple days away, highs or lows of other days away. When you trade a small account, you don't have that luxury. That's why we trade on a smaller time frame, because the amount of volatility, our account can only handle so much of that volatility. And remember, when you increase the leverage, the smaller amount of volatility you have to work with. So if it unexpectedly shoots against you, there's even a smaller space between where your stop losses hit, again, for the full amount of your trading account. So make sure that you practice. Make sure you open any position. Listen to this. This is super important. Make sure you open any position you're trying to first on the demo account. That is your way to guarantee that you understand the risk parameters of your trade. If you open your trade in the demo account, you will physically see and can measure where the stop loss will be. So that is a very basic, very primitive, but effective tool to understand how much space you're working with when setting your stop loss or take profit. Also, how the volatility will impact the trade, how big the multiplier will make your risk. Understand, to use the demo account is to save yourself money. Use that tool. So trading conservatively, we talked about. There's another rule. Unfortunately, I can't seem to look both at chat. Here we go. Sir, please, very lost. All right, complain. No contest today, you guys. Like I said, my name is Yaroslav Burchenko. Naresh, thank you for asking. Yaroslav Burchenko. I'm a market analyst at Olymp Trade. Have been trading for over 10 years now, and doing all sorts of kind of market experiments to try to find the most effective strategy to get you guys in a consistently profitable state of mind and account. Okay, good stuff. So no questions that are quite difficult, I guess, to answer. My other point of advice would be for new traders and people trading with a small account would be to adhere to a 1% rule. So what that means is I can only trade 1% of my account. I trade a little bit more. I trade 10%. Just one account is not feasible for my $1,000 account. But if you want to kind of experience trading and work out your strategy and actually make results, whether they're bad or good, go ahead and use a 1% rule. It'll allow you to see if there is stability in your trading strategy, and never, I guess, increase the risk and change the strategy, because when you take on more risk, again, and you take really poor entry points, the formula goes against you incredibly quickly. So the amount of loss you can incur ramps up incredibly quickly, and like we saw before, it puts you back significantly. So small gains, even smaller losses, is the most proper way to go about growing a small account. All right, we're almost done with the academic part, guys. Hang tight. Bottom line of what I wanted to tell you guys today is that um, we are sometimes undercapitalized. We don't have enough money to open, multi-thousand-dollar positions, and you would think that those accounts cannot trade successfully, the ones that have a small amount of money. But that statement is just not true. You can make stable, consistent income with a small account. Again, you have to have less trades. They're less trades that you take throughout the day, but they're more consistent. In fact, it's very good form to then continue to use that experience that you gain with trading a small account and being very scrupulous, trying to earn every penny. That transfers over then into a big account. You use the same principles, but you just have more room to work with, more money to work with. Again, your money works for you. That's what's happening in the financial markets. Your money works for you, and it just works more broadly, right? There's more result to it, but again, there's more risk involved as well. So if you can trade correctly, there's no reason that a small account cannot be consistently profitable. I know more than a few. I'm from a developing economy. I know more than a few people that make a living off a small trading account. They focus on risk management. They correctly apply all the things that I have taught you over these 2 days, um, especially the 1% rule. The 1% rule allows you to have that same amount of work room, that you can make the same amount of mistakes that a big account would make, also using the 1% rule. You trade only 1% of your account. So that would be $6 for my account right here. All right. So now I'm going to leave the room open to you guys. So we are going to be looking for trades to take together while I wait for any of your questions. So Shubham Rajput, I congratulate you for making the $20. Also, Shabana Khan, thank you for your well wishes. You were first in chat, actually after Dixon Jack, to write us all good wishes. Thank you. We do wish you as well. Loads of riches, lots of health, and happiness in all the things that you do in life. So let's go ahead and in chat write any asset that you see that is worth trading. Again, remember, don't randomly shout things out. Think about it first. Look at it, consider it yourself, and if you think that it's a good trading opportunity, send it in chat. Because there's nothing worse than seeing a person in chat and you know that he's made bad calls before. Usually, again, those are the analysts you don't want to listen to. So let's go ahead and I'll start the process of looking of where we can find some action. So I'm going to have a look at the Forex pairs. We have the Australian dollar, making a big return. Swiss franc is doing not so well. Let's have a look at the dynamics of the two. Okay, we missed the party. There were some assets we saw yesterday that had a pointing turn of turning around. You guys can see on the 1 hour graph, this is outlined perfectly, this horizontal level that we broke out to. So this is a legitimate breakout. This does not look like a false breakout to me, you guys. Again, the trading signal was right over here where we should buy. So if you are using the same indicators that I'm using and watching the market, when you have a cross of the moving averages and a cross of the zero line, and also a few candles later, the CCI indicator confirms this. This is a really good trading signal when you're trading currencies, especially cross currencies. Guys, this is the thing. You have to understand, cross currencies are a weird kind of wave that moves like this, right? This is the way that these currencies move. And so what kind of tools do you need to read that market? You need oscillators. Oscillators are specific mathematical algorithms or formulas that help a human being visually understand wave patterns. So that's what we have here. We have two very powerful indicators that showed us that that would have been a good buy signal. Right now, I'm late to the party. There's absolutely nothing I can do here. I could try to short this. That would be dumb. What if the price continues up higher? I could try to buy. Again, that would be dumb because we can sell from here. I have no idea where price is going to go from here. This is not a high probability trade for me. I'm not going to sit on this. I am worried about my Australian trade that we have open, as it is very close to that level that I don't want to be at. And again, this candle keeps pushing and pushing higher. And remember, I've told you guys before, this is more downward pressure. This, when it's hugging it, it's hugging it. You see for the last 4 hours, it's just really tight. This could break over to the other side. And so what do? I start having a look at the US dollar. So I go to my fixed time trade category, have a look at our indexes. Where are the indexes? Here we have the basic dollar index. So what is the dollar doing today? I see it's bullish. I see it's broken out of that downward trend line. First it was resistance, then it's support, 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 resistance, break through it, break below it, break above it. Really hectic trading. And we can kind of tell that there's really not a lot of volatility from the US dollar today. Absolutely not a lot of volatility. It's downward pointing. There's a lot of moving averages that are as a level of support playing out on the 10-minute graph. On the hourly graph, again, we are above levels of support. So this worries me as the most likely way because we're above them already. We're already above them and have been above them for the last day of trading. It's quite likely that we're going to continue up higher. It's just the way that the market functions. If we're trading below it and we hit into that level, then it's very likely that it will drop down. So not quite sure about the US dollar and what I want to do there. British pound franc, Jayashir Riv Kamur. British pound, Swiss franc. All right, I want to have a look where it's heading. It's in a complete and total flat. Wow, when's the last time you saw a currency this flat? So as we are trading in a flat, we're at the top of the flat. What I want to see is some bearish movement already. I want it to happen. I want it to start, and then I want to open up a sell trade. But I don't see the bearish movement starting quite yet. Do you? Javashri, do you see the bearish movement? So this is kind of a rough outline, but this is the levels where I pay attention. Dropping down to the 1 hour graph, we have just bullish movement. Again, I don't want to take it. See how far away we are from there. It's very possible we will continue up higher. Not a trade I want to take. Again, I would have taken it a few candles back, so somewhere around this candle right here, but not at this time. Euro NZD. EUR NZD. For up. Again, on the hourly graph, we don't have that. In fact, it looks like there's a high probability that it could break down. See how the move is. First we had a small attempt to go down, then we had a bigger attempt to go down, and now the attempt is huge. That one candle, before it took 3 candles to erase it, then it took 2 candles to erase it. Now it takes 1 candle to erase everything that the market made right there. Look at that. That's a good sell signal actually right there. See, I don't really like trading these breakouts. I'd rather trade a reversal that has already started. That's a more high probability trade for me at this time. Again, I'm already half of my account in the risk zone. So we've broken this level, but it was also broken before. This level is here. This is kind of the bottom level that, see, when we have a level that's so close, that's so strong, it's very, very, very likely that price will drop down to this level and then stall. I want to be in positions that are already going, that are already in the money, like 5 minutes after I open them. So that's kind of the market that we look for. And it might be that we don't find anything to trade at all today. Euro British pound. So this is Toshan Sud. Euro British pound for up on 5-minute chart. A little too soon. Very, very good. A little too soon, but yeah, I agree that that could be an up trade for sure. A little weird with the positioning of our indicators. Again, it could be anything. This could be, because this candle has just started, this candle could be anything. Look at that. It's just started on the 5-minute candle. It could be up. It can be a continuation down. Not yet, but keep watching this. If I make this gold, gold is the asset that made me the most money last year, and it's also the asset that lost me the most amount of money last year. So I am watching after this correction. What do we have? See, it's unable to make higher highs. It keeps making higher, or it keeps making lower highs. This worries me so much, and it bugs me. What about Bitcoin, guys? Let's have a look at Bitcoin. When you have a small multiplier, like we have for for Bitcoin, you have to open up higher positions to make more. So instead of, $6, I would open $10. But it broke out. Remember we were talking about? I was telling you guys when it hugs it like this. Look at this hug. It breaks out to the top. Remember I told you guys that yesterday? Who was here yesterday? Remember? Let me send you guys the link real quick to yesterday's webinar. And I'll also put it in the description area below. So here's yesterday's video. I showed you guys that when we have a trend line like this and price hugs the line like very tightly for a few periods, it's usually going to have a breakout to the top. That's what I see right now in the Australian dollar. See how it's hugging it like super nicely? This candle is good. Now this is what I want. So keep watching this, guys. If anybody could just keep this open up on their account, I'd appreciate it. Just because I would normally keep this open and have a look at it and tell you guys what's up. CHFJPY. And obviously, you can tell I don't trade that asset. Ooh, breakout. Look at that. That breakout just started, guys. Ooh, really good stuff. Whoever caught this, good job. Yeah. I'm selling this. Where are we? 67. Let's go 70 multiplier 500. Okay, down. Oh my goodness, you gotta be kidding me. Gotta be kidding me. Whoever saw that, let me see who saw that. Nareesh, good job, buddy. Good job, my friend. Yeah, that's exactly what an asset that's in the action money looks like. That's exactly it. And where do I want to stop? Let's have a look at it together. So somewhere around here, maybe somewhere in the middle of here. How many days do we want to have this open for? Oh yeah, that looks like a heck of downtrend. And this breakout to the bottom. This may take a few days to work out, but I like it. I like the risk that I took on the trade. And I can make 100, well, maybe a little bit less than 100%. But the problem with this trade, guys, here's the problem. Where are we going to put the stop loss? Up here? Up here? Super bad stop loss, like super duper bad. So if we don't break down, and it's going to stall here and it's going to go up, nothing moves down. Like even this move down brought it right back up over here. So we're going to hang out around this area for a little while. Nonetheless, I do need to put on a stop loss somewhere. The move has already went below where we entered. Like what, above here? I can't even put it up that high. All right, just to outline it, poor risk to reward ratio, but the trade has started going in our favor right away. Maybe a fixed time trade would have been a better option. But yeah, let's have a look on the 10-minute time frame. Ooh, yeah, this is good. This is good. So I imagine there's some news, I guess. Switzerland and Japan. What is going on between Switzerland and Japan? So Japan stock investment dropped, bond investment dropped. So outflow of capital happening in Japan. And you know what? That is absolutely normal. Japan is one of those countries that exists from exporting their capital. That's why they need that export of capital, and their government is interested in investing overseas because they have a very high inflation rate and a very high export rate. So they need to buy foreign currency in order to keep their currency from totally devaluing, because their companies naturally want to exchange foreign currency for the Japanese yen. So in order for it to be from going too high, they need to export that currency, and that's what's going on. Yeah, see, I do think that we're a little too late to the party. It would have been super good to get in here. And I even waited for that whole entire candle to break out. So expect volatility, guys. This is going to be one of those quick to get in, poorly executed trades. Maybe I should close it right now. Oh, 63 cents. I don't know what to do with that. Okay, let's leave that open. EuroCAD broke down. Let's have a look at EuroCAD. Guys, the way that we're talking right now, and you guys are shouting out different assets that are moving really reminds me of a hedge fund. This is exactly what trading on a prop desk looks like. A bunch of traders are sitting together, whether they're in radio chat or whether they are in normal chat like we are having right now together. Traders do work together in this kind of format. So this is the level that we broke down from. I want to have an understanding of where we are. Ooh, wow. Hello, guys. Yeah. So I was actually looking at the EuroCAD previously. I just didn't take a position here. Yeah, what a crazy breakout. Because this high right here kind of put me off. But yeah, crazy breakout. Um, Again, it would have been better to get in there, but the breakout we have, see, what can we take? It'll probably go to here and then kind of stop. And there's all this area too. The more price hangs around an area, so see how there's a lot of times price was around this area and a lot of times price was around that area. What that means is that later price will try to gravitate back there. That's where people want to do business. That's where contracts and positions exchange hands. So think about that market structure. The way that works is that that's where price is going. So it's very possible that right now, this level, as we're hovering above this level, now we're going to go back to down to hovering around this level. And I do believe that the Canadian dollar could outweigh the euro significantly this year. So I do feel like I'm a little bit late to the party. See, when I see a hook like this, that's not where you want to be in. So unfortunately, I'm going to let this go. But you guys are on the money. You know exactly what you're talking about. I congratulate you. The fact that you are learning and you're understanding, and now you can pinpoint good trade entries is a good indicator that the webinars are going good. That you guys are learning something. That you guys are getting something out of it. See, this is why I didn't want to get in. This is exactly it. We're going to probably go back in the middle. So again, the most powerful positions, we identify the downtrend, and then we have a look at the top, and then we find the first few candles of it going down. Most powerful positions, stop loss goes up here. The only positions really you should be opening with a fixed time trade, or excuse me, with a small trading account. Good stuff. Yeah, use VPN. Kareem Margati, the European Union and United States have some of the most strict financial laws. Like if you guys are aware, no international company or international broker is allowed to service U.S. clients. So they have a monopoly on their own stock. You can buy U.S. stocks, and foreign companies can service the U.S. stock market through, again, prime brokerage trade agreements, but you just can't physically open a brokerage or service U.S. clients. There's always an agreement that you sign, and so yeah. And Europe is one of those same things. There's a lot. We are getting certification in Cyprus, and I think that will open the door to Italy, to Europe. So I don't know when it will be available. Fibonacci shows up signal EuroCAD. Let's have a look. I don't know which Fibonacci signal you're doing. I mean, I could stretch out something over here. This is the 10-minute graph. I think it's overstretched, to be honest with you. You see this move up here over the 0, and then this line again, and a little bit longer. Wait for this amount of time. That's why I love the CCI indicator. It shows you time as well. So for those of you that are FTT fanatics, use the CCI to wait until it actually shoots out from the 100 area. So this is what you're looking for. You want 100 area to be broken out in order to buy, and then you want the 100 below. So now the fact that we're going up here, this is a so-so signal that we are turning around. But again, we're below the 100 line. So I don't know. Hey everyone, I'm new here. What's the strategy? So Guy, the Brahmani, the strategy is quite complex. What you can do is rewind the video to kind of watch it in the beginning. I walked you through some of the thought processes that go through my trade strategy when looking at different assets. So if you guys came and you're late to the party, this video is going to be recorded for you, and you can watch it at your leisure sometime later. Right now, stick in chat live so you can kind of see what I'm doing and ask your questions in real time. Okay, I want to find one more asset to trade you guys before I log off. So this is something that I like. We are continuing up higher from some sort of, as you guys saw, the global trend is up higher. All right, global trend is higher. We had somewhat of a correction. We have the makings of a continuation up higher. Although, oh look, this has just started. This is going higher. This is going lower. That's not what we want to trade. This kind of divergence is not what we want to trade. So even if I do go on the smaller time frame, again, no, don't want to trade this up higher. I was thinking of buying. No, not after that candle on the hourly time frame. So Aussie franc already done. Could be a correction lower. I don't like it. No. Aussie New Zealand dollar. Aussie New Zealand dollar. Something of a bearish reversal. That big old candle right there signifies that we're going to go lower. Ooh, I do want to take it. I do really want to take it, you guys. We're at the bottom of the Bollinger Bands indicator. I'd love to take it when it retraces back. Yeah, I don't want to take it right now. Like, look at that. It's below the 100 EMA, but returning back to it with a candle. This big old mound has already happened. May have kind of missed it already. And I also want trades that say if I leave them on for a few days, they'll only get better. Oh, guys, this is it. This is it. Selling some more. So this is kind of the 1, 2, 3 candles that I want to trade. Unfortunately, that wasn't the hourly graph. I missed it. But still, three bullish candles. So I'm taking additional risk, putting my stop loss at this level right here. Ooh, my multiplier is 500. Oof. I wish I kind of lowered the multiplier, but again, high risk, high reward. And I'm putting my take profit somewhere in the middle. Actually, why? When I can put it down here. So the reason I'm putting it in the middle of the previous little clump of trades is because I told you guys price is going to gravitate to that level. Notice I'm not putting it at the extremities at the very, very far end. I don't need that. I need it if we reach that broad area, I'm good. My big old multiplier and my big risk that I took is good. I don't want price to go back up here. That's what I don't want. I don't want it to push and kind of retest up there. That'll be really bad for this trade that I just took. So those are examples of, I guess, as risky as you want to get. You don't want to get any more riskier than that. And when that position ends up, I think we're good, guys. I do think we're good. See how price previously tried to go below, tried to go higher. It was lower than this. I know it's a little bit nitpicking in those little candlesticks, but it matters. It matters, and this is a little bit of foreshadowing. So I do think this trade should be good. You guys, that's it for today. What I want to tell you is that we are going to have a competition where we are going to give people that actually trade in that competition advanced status. We're going to have bigger statuses for you guys to test for free. Look, that breakout has already started. So that's what I mean by ride the wave. It's okay to stay on one asset. Just make sure that the signals you get are good. And remember, when I saw this, I started worrying. And that's good. You guys should worry about those trades more than what's making money. I haven't looked at my trades that were making me money. Ooh, this guy opened up. Yeah, I told you guys, bad opening. Really bad opening. Like this big candle makes me worry a lot. And the stop loss is stupid as well with the 500 multiplier. Really poorly executed trade. Let me show you guys how to close bad trades. Okay, I don't want to close that, dude. So $16, $14. That was a bad trade, guys. That's not the kind of trade you should be taking when you have a small account. That was a breakout. You missed that breakout. No need to pile on. Yes, that is a big move. Yes, it's going to continue going down lower. But when is the question? Would it have reached my stop loss right here? Yes, I would have lost all of that money because I screwed up with the multiplier. And one rule of thumb, always, guys, this is the last a little tip I'll have for you today is gold. In fact, this whole entire webinar was gold. If you do make some money, go ahead and leave me a thumbs up and share it on your Facebook page or whatever social media you guys have. It's important for me. First of all, it lets me know that the information works, that I'm doing a good job. That'll motivate me to give you more good information, right? But second of all, the tip that I wanted to give you was please always have your multiplier on 50. You took one super risky trade, so we took that Australian dollar $70 risky trade. After you finish the trade, close your multiplier back to 50. Remember how dangerous this is. I lost $16 due to a poorly executed, poorly money managed trade. But I had the integrity to close it. And you need to admit when you made a mistake early. It's better to kind of close the trade than try to wait for it to swing higher and then swing a little bit lower and then make a little bit of money. It's better to lose 16 than to hold it and try to make 16. That is a really good piece of advice. All right, guys, that's it for today. Like I said, this is a recorded webinar, so you guys have an opportunity to watch it as a video at your leisure. So if you missed something or don't understand something, you can rewind the video and watch it again. All right, I gave you guys the best that I had. I hope this kind of information makes you guys a little bit of money trading. Hope it helps you grow as a professional in this sphere. You guys come to the competition we're going to have. It's going to start in February. Again, lots of prizes, lots of giveaways for you guys. Next week, Angie is going to give you guys some additional webinars. So for those of you that are fans of Angie, come next week. I won't be streaming next week, but I will be releasing videos about the hot news and the major market moving events that happen. So stay tuned to the channel, subscribe if you haven't already done so, and that's it. You guys take care of yourselves, of your families. Make sure you have an investment plan for 2020. And if you guys have any questions or want to ask about investing or kind of the long-term trading plan, go ahead and ask your questions in chat, and I will personally be answering any comments left behind. All right, you guys, thank you so much for your time. I appreciate all of you, sending you lots of love, lots of respect. Take care of yourselves, and see you guys next time. Peace!